Hi, I'm Barry Page, Infinite Banking Practitioner and your financial advocate. In this video, hopefully I'll get you to rethink your thinking. Not reimagine what's going on, but rethinking. If you haven't reimagined the recession that we're in, or noticed that inflation is raging out of control, then maybe this video will get you to think about it. In this video, I'm going to share some real problems and some real solutions. So get comfortable and I'll be right back after this intro. My mission is simple, to help you protect your family and keep more of your money. I'm here to help level the playing field for families and those who seek the truth. There's always a new way to make money. But at the end of the day, it's your family's security and your legacy that matter. And I promise to help you protect what's really important to you. Legacy money starts now. Let's think for a minute. Now, while I'm a creative and believe in imagination, what I don't believe is that you should reimagine what's happening. I want you to exercise your brain for at least 10 minutes. I want you to think. Earl Nightingale, the father of the spoken word, said, "People just don't think." Have you reimagined the recession that we're in? Because if you've noticed in the news, they're saying we're not in a recession. As a matter of fact, our Secretary of the Treasury, the former Federal Reserve Chief, Janet Yellen, said, "Things are all good. We're not in a recession." She's been on a month-long tour sharing this. According to all accounts, up until recently, a recession was when we have 2 consecutive quarters of negative or zero GDP growth, gross domestic product. So think about that for a moment. Do you think that things are all good with our economy? Especially with this out-of-control government spending and the mushrooming debt? I want you to think about where the government gets their money. You see, they don't produce anything, yet they are the largest employer in the world with over 3 million employees. And I'm not just talking about the military, I'm talking about federal employees. And let's not forget state and local employees, which are also mushrooming out of control. And then there's also non-government organizations, NGOs, which are indirectly funded by the government. Some call them civil societies, funded also with dark money. But I digress. Let's talk about the numbers and the indicators. I just got my monthly updates from Martin Weiss, whose multi-generational family ratings company actually studies the data. They look at the real numbers. And they don't solicit or accept payments from the companies they rate, unlike the other ratings companies. Here's what they're saying. They're saying that things are much worse than the government is telling us. And we could actually be headed towards a depression. The question is, what is your plan B? What are you going to do? If things get bad, what will you do? What will you do if you lose your job or get laid off? What will you do if your business can't afford to stay open or you go bankrupt? What will you do if rates increase to a point where you cannot pay off your debt? How will you take care of your family? How will you pay your bills? You're going to need money. You're going to need cash flow. You're going to need an emergency fund. You will need to access your savings. Now, we've all been experiencing inflation lately, but some of us don't quite understand it. They don't understand what's really happening. So let me break it down in real simple terms. Let's say that you have some guests come over. And being a good host, let's say you're in the South like I am, and you offer your guests, your friends, some sweet tea. So you run into the kitchen, you open the refrigerator, and the pitcher is only about half full. Now you've got 3, maybe 4 guests that came over. So what can you do? Well, you might add some water to the tea. So now it's diluted. It's not as sweet. And that is how inflation works. They dilute the money supply, so your dollars are worth less. They're worthless. Just to further explain inflation, I know to many of us it means that the cost of our goods are going up. The cost of goods and services are increasing. They use this method called the Consumer Price Index, the CPI, you may have heard it called. So this is one way that they monkey around with the numbers. Former Federal Reserve Chief Alan Greenspan was one of the first to do this. He started calculating the CPI based on substitute goods. He stated that if one consumer good went up in price, then the consumer could just choose another good at a cheaper price. So then the CPI no longer measures the real price of goods. Instead, they're using prices of substitutes. This artificially brings the inflation rate down since they're not measuring the same goods anymore. So basically the government says if you can't afford the price of steak, then you should buy ground chuck or maybe hamburger instead. Additionally, the core CPI does not include the real goods and services that we have to buy, like food and energy. And they assume that these normal people, consumers, you and I, don't understand what core items are. To better understand inflation, you might want to watch some of my other videos, Inflation and the Federal Reserve. You see, for the past several years, the Federal Reserve has been expanding the money supply. The very meaning of the word inflation is to expand the money supply. That's what they've been doing. They've been buying bonds and securities to the tune of $80 billion per month. And in many cases, it was upwards of $120 billion per month. Now you might be thinking, where does the Federal Reserve get all of that money? Well, in simple terms, they just print it. It's called modern monetary theory. For years, they called it quantitative easing. Now, many people that advocate their ways are saying, we don't have to pay back the money. But you see, when they do that, they've loaned money to our government. And who do you think will repay that money? Well, it's the taxpayers, of course, you and me, in the form of inflation and higher taxes. And you have to ask yourself, well, what happens when they stop buying those bonds and securities like they've done recently, or like they are doing now as they are easing inflation? Well, as you see, the markets have gone down. They're very volatile. You see, they've been artificially controlling the money supply, and they've been buying government debt. It's no longer just the Chinese. The Federal Reserve is buying our debt for pennies on the dollar. So if the government has debt, who's responsible for paying that debt? Think about it. Where will the government get the money? You probably understand that interest rates have been held artificially low. They do that with the purchasing of bonds and treasury notes. Now all this may sound confusing, and they want it to. So you just throw up your hands and you entrust in the government and the Federal Reserve that they'll straighten everything out. Well, how are they doing so far? Since the Federal Reserve was created in 1913, ironically the same year that the IRS, the Internal Revenue Service, was created, the value of our dollar has gone down. A dollar is now worth less than 4 cents. Now it may have increased in recent years because many of the other countries that have bought our debt are in worse shape than we are. The next time you get out your wallet, pay attention to the money in your wallet. It says at the top, Federal Reserve Note. It's fiat money, it's paper money. There's nothing to back the paper money. And if you'll notice down at the bottom, there's a signature from the Treasury Secretary, who I mentioned earlier now is Janet Yellen, the former Federal Reserve chairman. Do you see a conflict of interest? So I'm going to give you another example. Let's say that the U.S. Treasury gets a prime rate when they borrow money from the Fed, just like the partner banks do, the member banks of the Federal Reserve. Currently, the debt in our country is over $30 trillion. And that doesn't include the unfunded liabilities of Social Security and Medicare. But for giggles, let's just use the $30 trillion number in this example. Now, again, the Treasury gets a prime rate. Let's say that rate is 1%. Now, 1% of $30 trillion is about $300 billion. Just this year, that's the interest on the debt. Now, just like your credit card, rates are going up. And let's say that the rate the government pays now is 4%. So it has increased from 1% to 4%. Some quick math will tell you that that means it's gone from $300 billion to $1.2 trillion this year alone in just interest. Now that number probably won't even fit on your calculator, but you can try it if you like. Think about that for a moment. Where will the money come from? Those greedy corporations, those evil capitalists, they're coming to get you. And they've hired 87,000 new IRS agents to do it. According to many economists, inflation is actually over 15%. Now, if the government is telling us it's 8 or 9, and economists are saying it's 15, let's just split the difference. I want to give you an example so you can think a little bit. You may have heard of the Rule of 72. The Rule of 72 says whatever the interest rate is, you divide that number into 72. And the corresponding number will be the number of years that it takes for your money to double. Or, in this event, the price of goods to double. So, if we're using the number 12, the interest at 12, that means in just 6 short years, the cost of goods will double, or it will take you twice as much to live the lifestyle that you're living today. Imagine that. If you're making $100,000 a year today, and that's your lifestyle, in 6 short years, if inflation continues at 12%, then it would take you $200,000 just to live like you are today. And to add fuel to the fire, you've probably been receiving some credit card offers in the mail. I know I have. They're offering 0% interest rates for 6 months, maybe a year. Of course, you'll have to pay a fee. It could be a couple hundred, could be thousands of dollars for this fee to transfer your high interest rate balances to them. Now, of course, this is a teaser, because if you'll read the fine print, that rate could go up to 24% or more next year based on the prime rate. And just this morning, I heard where mortgage lending was easing again. What could go wrong? What that means that is, in the middle of all this economic chaos, that banks are easing their lending practices. Some people may be able to get a mortgage that they would not normally qualify for. Maybe they don't have the 20% down payment. Maybe they don't have an excellent credit rating. Does that sound familiar? Do you remember what caused the Great Recession in 2008, 2009? Here's something to think about. Are your dollars worth more now or in the future? If your answer is now, then you get a star. As inflation increases over time, the value of our dollars go down. So the problem with inflation and with taxes at the end of the day is debt. And the solution is cash. We have to have cash in case of emergencies, in case of volatility, to protect us and our families and our businesses from loss. Life insurance provides cash when you need it and for whatever reason you want it. So let's think a minute. Let's rethink. What is the solution? We have to start thinking like bankers. We have to do what the banks do. But you don't have to play by bank rules. The infinite banking concept, as outlined in the book Becoming Your Own Banker by R. Nelson Nash, allows you to take control of your money. Mr. Nash said, controlling it is the most important thing that we can do over our lifetime. The infinite banking concept is built around a centuries-old financial product called permanent dividend-paying whole life insurance. These financial products are only sold through mutual insurance companies. I'm not talking about universal life, variable life, index universal life. I'm talking about good old-fashioned dividend-paying whole life insurance that's been around for centuries, before the tax code and before the Federal Reserve. It's lasted through depressions, recessions, and tough times. So what does permanent life insurance do? The same thing that it's done for hundreds of years. It protects your family. It provides cash when you need it, for whatever reason you want it or need it for. You can finance your major purchases when times are good. You can use it for emergencies when times are bad. You can access the capital on your terms at any time for any reason without bank qualifying. It's not dependent on your credit score, at least once you're approved. When you apply, they're going to check not your credit score, but they're just going to check your financial stability. They're going to check your driving record. You're going to have to do a health test. But once you're approved, it's in force. The rules do not change. You own the contract at that point. So let's go over the benefits of permanent life insurance, dividend-paying whole life insurance from a mutual carrier. One, it's safe. You cannot lose the money once it's in the account, as long as premiums are paid during the scheduled period. Once a dividend is paid and declared, you can't lose it. Dividends are not guaranteed, but the mutual carriers all have a consistent record of paying dividends to policy owners, usually more than 100 years. The carriers that I work with all have been paying dividends every single year for over a century. That means through the Great Depression, through all of the ups and downs, the recessions that we've had in the last 100 years, they paid a dividend every single year. Permanent life insurance allows you to get multiple uses of your dollars. It provides protection. It provides savings. It provides guaranteed growth. And it provides financing as long as the policy is structured correctly. You have access to the capital on your terms. You have liquidity, use, and control of the money that's in the account. So you can sleep better at night. I understand you've got other accounts. You might have a 401k, an IRA. Unlike a Roth, which is still a government plan, an IRS plan, there are very high limits on the amount that you can contribute. As a matter of fact, the MEC limit is almost out of reach for most people. Whatever assets you may own, life insurance will make those assets better. You may own other assets like real estate, mutual funds, Bitcoin or other cryptocurrencies, maybe even gold or silver. But how do you spend those assets? Would you rather sell them so you can have access to the money in a down market or when the market is up? You know the old axiom, buy low, sell high? Well, You don't have to sell in a down market when you have other ways to access capital. Life insurance is the other way. It's the buffer. It's the volatility buffer. So you can sell your assets when they're at a premium. Maybe you have a mutual fund. What happens when the market crashes? What happens if you retire and the money that you thought you were going to have is not there? What if, when you retire, taxes have gone up? What happens when you try to access the capital and taxes have increased? So whatever amount you thought you had, you now have less. You can use the life insurance as a volatility buffer. In any of the years that the market might be down, you can access the capital in your life insurance as a supplement to your retirement income. Life insurance is the only financial product that can stand completely on its own. It provides protection, savings, and growth. Your money in this account, in a infinite banking account, a private reserve, a permanent life insurance policy, grows tax deferred. And it can actually be accessed tax-free as long as a few simple rules are followed. Life insurance eases estate planning. You can structure the policy for your specific goals. You can access the capital at any time for any reason. The infinite banking concept is simply a strategy, a place where you can warehouse your wealth, a place that you can store it off the grid so you don't have to report growth in the policy to the IRS. It pays a tax-free benefit to your family or beneficiaries. It's a financial bunker, a place that you can store your capital. You can use it to purchase other assets like real estate. You can use it in your business. Loans are available based on your cash value, your equity in the policy, in the contract. Loans are available at a competitive interest rate. And if rates go up, guess what? Your dividend will likely go up. Loans are available on your terms, meaning you set the repayment schedule. You can access the life insurance whenever you need it for whatever reason. There's no loan applications. Depending on the amount of the loan, in most cases, there's very little paperwork required, if any. You can often receive money within a week. It's liquid. I just recently made a loan against one of my policies, and I got the money deposited directly into my bank account in less than 3 days. Other times you might request a check by mail for larger amounts, and you'll usually have it within a week, business days. When you repay loans, the principal goes directly back into the policy. You have access to the capital again. The money grows tax deferred, and it's accessible tax free. You can use the money if you become disabled, if you need long-term care. You have access to the capital. You can use infinite banking to recover the money that you would normally transfer away to others. So you never have to depend on the banks or the government for money. Of course, this is only a few of the many ways that permanent life insurance can work in your favor. The reason Nelson Nash called it the infinite banking concept is because the ways to use it in your financial life are literally infinite, and the returns can be infinite. You own and control the contract. Nelson Nash said controlling it is the most important thing we can do over our lifetime. Are you ready to start doing what the banks do and finance your purchases through your own system of finance? You don't have to reimagine. Just imagine having access to capital on your terms at any time for any reason. It's been around for centuries. There's no reason to reinvent the wheel. So rethink your thinking and start thinking like the bankers do. I hope you learned something today. I'm your financial advocate. If I could ever help you in any way, just let me know. I'm an authorized IBC practitioner, and I've been using infinite banking in my life for nearly 20 years. I've used it to purchase real estate. I've used it to pay off debt. I've used it for cash flow in my business. You can too. If you have questions or comments, just leave them in the comments section below. If you'd like to know if infinite banking could work in your life, then schedule a meeting. In the description below, there's a link where you can schedule a meeting so you can learn more about IBC and we can review your finances to see if infinite banking is a viable option for you. I'm Barry Page and I'm your financial advocate. So thank you for joining me today. If you like this video, give me a thumbs up. And if you haven't already, go ahead and smash that subscribe button. And I'll see you in the next video.